And just coming into us, a slew of price target cuts for iron ore producers in the wake of that widely reported fall in rebar and all the rest of it. You know, what do you see going on in this market with that reassessment? Is this a sort of a step change reassessment, or just something that will cyclically then pick up as things maybe shift off the back of this weakness at the moment, the trough we're in?
Given the weakness that we have seen in iron ore prices with a 30% fall since the peaks that we saw in April this year, we have seen brokers coming out to cut their target prices on iron ore stocks. But if we have a look at some of the cuts that we've seen, I think Citi's come out this morning and it cut its target for Fortescue by 30%. But it still has a target of $5, and Fortescue shares, of course, at around about $3.85 at the moment. So iron ore prices, yes, they have been soft, but on the back of Ben Bernanke's speech on Friday, we have seen commodity prices rising, and that includes iron ore. So no doubt that we will see a bounce back in some of those materials stocks which have been under pressure over the last few weeks. In fact, Friday was a great day for the materials space, and it's expected that that's going to continue into today. One of the things to be aware of, though, is that BHP does trade ex-dividend, so that's likely to be a drag on the materials index. But we'll be watching gold plays very closely. We're expecting to see some of the best performances on the Australian market to be the gold miners, after gold prices jumped by the second highest level that we've seen this year. In fact, we've seen gold prices hitting the highest level that we've seen in around about 5 months. And in fact, if we have a look at exchange-traded gold products, they're now the third largest holding behind the US as well as the Germany holdings of gold in terms of the reserves that they hold. So a huge position really building in gold on the back of expectations that we are going to see quantitative easing from the US. Bernanke's speech was very important. It looks like helicopter Ben will come to save the day again, but the big question is when, and that's why the US job numbers are going to be so important this Friday. There's only 3 job reports left before the election, and we know that this job report's number on Friday comes just before an FOMC meeting and just comes after the ADP job survey, the private job survey, as well as the US jobless claims. So really the markets are going to be watching that jobs number to get an indication of whether we're going to see a quantitative easing announcement in September. But really those gold miners expected to shine today. But as you mentioned, Carsten, some of those iron ore miners seeing our broker cuts this morning.
One stock on the move today, and that is Guns, out with some numbers to the minute. A write-down, though, in all of this. What do you kind of make of the landscape for this stock?
Well, one stock that won't be on the move today, Carsten, is Guns, and that's because this is a stock that's been in a trading halt since the 13th of March, and it did come out with its numbers after the bell on Friday, but it's a pretty horrible number. We saw a loss of $904 million. That follows a loss of more than $350 million in the previous year. And of course, the future of Guns is very much in question. It's been trying to find a partner for its pulp mill. And this is important because what we have seen is an oversupply of wood chips here in Australia, and the high Aussie dollar making our products less competitive as well. And the pulp mill was all about extracting water out of the product, so it wasn't exporting water, but the more valuable component. But it has had trouble in that respect. And of course, it's now at the mercy of its bankers. It is relying on its lenders to give stability to operations. But if we have a look at this result, it's a pretty horrible result. We're going to see the Forest notes being converted into fully paid ordinary shares as of the 15th of October, and that means more dilution for ordinary shareholders. We'll see more than 500 million shares adding to the 800 million shares already on issue. So we're seeing an extra 60% of shares coming to the market with that conversion from the Forest notes into fully paid ordinary shares. So the underlying problems of Guns continue in that we are seeing oversupply in terms of wood chips, a high Australian dollar. It still needs to get its lenders' support. So we'll be watching this one very closely, seeing that it has not traded since the 13th of March. And now the market's watching to see whether it is going to continue as a going concern. The report on Friday says that they are assuming that it continues as an ongoing concern. But really the key question here, first of all, is whether it has its lender supports and the banking support there, and then secondly, whether it can find a partner for that crucial pulp